Economists came together today to discuss strategies for Taiwan as the U.S.-China trade war takes a clear turn for the worse. Washington said Monday that it plans to place high tariffs on nearly all Chinese imports not already subject to duties. The list includes laptops, tablets, and cell phones. This upcoming round of tariffs would threaten Taiwan's vital electronics sector, which for decades has used China as a manufacturing site. Today, at a conference held by the Taiwan Institute of Economic Research, a top official said Taiwanese firms will feel short-term pain if the new tariffs come to pass. But he said there could be long-term gain if Taiwanese companies can accelerate their shift out of China.
Today TIER held a conference focusing on the economic outlook amid the U.S.-China trade war. China-based Taiwan companies are about to land squarely in the line of fire. A government official urged them to shift their supply chains to Southeast Asia.
Taiwanese businesses can choose any area or country in Southeast Asia to establish a supply chain away from China. If they do that, in the next 20 years, they could play a very important role in the global supply chain.
But for now, the global economy is bracing for troubles on the trade front over the near term. The International Monetary Fund has warned of slower GDP growth in developed economies this year. The Asian Development Bank has downgraded its GDP forecast for Asia by 0.2 percentage points.
Due to the sluggish global economy, Taiwan may post a slightly low growth rate in the next 2-3 years. But I think that if we give Taiwan a few years' time, its economic growth will be on track to return to hit 4 to 5% in the next 5 to 10 years.
To date, overseas Taiwanese businesses have committed more than 300 billion NT in investment back to Taiwan. Experts say that if capital continues to return, Taiwan could emerge as a winner in the U.S.-China showdown.